And now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal, the full story, real talk about money, markets, life. Now, it's The Real Investment Show, presented by RIA Advisors.
And it's that time again, Financial Fitness Friday. Rich Rosso, Danny Ratliff, CFP Squared. We're so happy to be with you this morning. I will tell you, Danny, you probably feel the same way. This week, I cannot believe it's Friday. It went so quick. I mean, weeks are just zooming by. You know, you're starting to see the holiday ads, right? Christmas, and you're like, oh my gosh, it's here. It's crazy.
We're skipping holidays once again. The Christmas stuff is out.
Oh no, where? Everywhere?
Everywhere, I guess. I don't go many places, but I did see them setting up some Christmas lights in certain areas. I'm like, come on, guys.
Do we have to rush it? It's not Thanksgiving yet.
Our rule in the house is like one holiday at a time. And Michelle's got a lot better about this. She used to have like all these big crates and bins for each and every holiday, which I get. That's okay.
That's fine.
And she's pretty good about not skipping a holiday.
I don't like to move ahead. I'm going to deal with one at a time.
Listen, I've got to cherish each day at this point. I mean, much less jump ahead.
We were growing up in New York. It was always the day after Thanksgiving, that Friday, that was the official start of the season. Like everybody would run to the local department store to see what kind of stuff they had. Like Friday was the day. That was the beginning of Christmas, right? But you didn't have all the stuff out beforehand. It was, the anticipation was great.
Yeah.
Because it was Halloween, then it was Thanksgiving, and then there was no Christmas stuff out. Nothing was up. It was the inklings of it, but there was nothing out as far as when, like, you go to Walmart today. I bet if you go, like, I was in Costco last week, they had all the Christmas trees up. Like, oh my gosh. Oh, man.
But were they on sale?
I don't know. I can't remember if they were. I can't remember. But, yeah, I agree with you. I think we push that stuff way too soon. Way too soon.
Well, it's all about the almighty dollar, so it'll continue.
It is.
Nothing's going to change there, unfortunately.
It really is. And then soon as Christmas stuff is off the shelf, it's like Valentine's Day. Like, okay. Slow it down, everybody.
Which I know you can't wait for, to go to CVS and pick up.
Well, on the 15th of February.
Yeah. That's where you buy next year's Valentine's Day gift, right?
That candy stays, man. It doesn't go. Listen, the day after Halloween, it's the same way. I'm in there, right? Because all the candy corn's marked down. I'm in there. But I'm eating all that wax. It's good. It's good for you. Puts hair on your chest.
It's good for your coat.
It's good for your coat. It is.
So you are a candy corn guy, right?
Yeah.
Yeah.
Now, again, I do temper my candy corn fascination.
How do you do this?
Well, I've eaten one bag already, and I'm trying to hold the next bag. So it's just a challenge. I look at it every day going, hi, how are you?
You're practicing rationing?
I do. So, like, I like the one that has the autumn mix, and it has the pumpkins. So Amy goes, I don't know how you do this. I don't understand how you, because she goes, what? So how's the candy corn inventory? I said, I had 4 pumpkins today. She goes, that was it? I was like, yeah, 4. I allotted 4 pumpkins. So
Pumpkins, is this what you call them?
Well, no, because they have in the autumn mix.
Candy corn pumpkins.
Yeah, in the autumn mix, right? Not just the candy corn. They have they are
man.
candy corn, but they're shaped like pumpkins.
And they're bigger.
And they're bigger.
Yes.
They're like, so it's like having 2 candy corns.
Mm-hmm.
You got it.
Yeah.
You got it, buddy. I got the candy corn math down.
Wait a second. If they're bigger, then it'd be like having
2 candy corns in 1 pumpkin.
Yeah, okay.
Yeah.
Yeah, so it's really like having 8 candy corns.
Yes.
Mm-hmm.
That's what then my next step, right? Today I had 8 candy corns, which is equal to 4 pumpkins, which is equal to sort of 3 caramel apples. Because they also make them like, there is a candy corn math in the house because I don't want to get crazy because I literally can eat the whole bag in one sitting and I don't want to
So do you hide them from yourself or what do you do?
No, I've got, listen, in this business, and you know better than anybody.
Got to have discipline.
We have discipline.
Yeah.
We don't have this immediate gratification issue. We have taught people delayed gratification. So I do practice that. It's not easy.
It is hard sometimes.
It's not easy. But yeah. And I've gotten good. I after I have my 3 or 4, I'm done. It's all good. It's all good. Speaking of done, I don't know how done the market's going to be today, but the Dow's sort of flat. NASDAQ is off about 56 points. I will tell you, this is possibly one of the most challenging markets I've ever seen, Danny. Most frustrating markets I've dealt with in a long time. So sticky price inflation. What I worry about is this Federal Reserve 2% target and if they're done. And why I do that is, and worry about it is, sticky price inflation came out at 5.5% for September. It is very stubborn. And inside the Atlanta Fed sticky price CPI, there are elements like rent and insurance. These are prices that do not change very often. And I don't know if anybody has gone through the increase in price in their homeowners insurance, auto insurance, right?
Average increase was like 37%.
Is that high?
Yeah. I mean, it's awful.
That's not going backwards. That's not going to be part of your disinflation, deflation issue. I also think that rents are not going to go backwards. The demand for housing is very strong, especially in the face of mortgage rates the way they are. And we're sort of at this demographic cusp for a generation to buy homes, and they're not doing it, so they're renting. You also have people who are retiring and selling in renting. People don't realize there are a lot of retirees who rent, not because they can't afford a house. It's because they've made so much money on their home, and they don't want to deal with the crap and the maintenance of owning a home. I have clients who rent, Danny, now. Some of them rent, and it makes their plan work because they have so much money tied in their home. Actually, I did a plan the other day that wasn't going to work, and we decided that she was going to sell the house. The property was worth a lot of money, right?
Mm-hmm.
We did that. We had to take into account the fact that she does have an exemption, but she might go above a little bit for capital gain purposes, which means if you're going to sell your home and maybe rent, you're not going to move into another home. You better keep track of your cost basis for that house and understand that, right, Danny? Understand it's what you've been putting into that home as far as improvements over the years. So, people don't keep track of cost basis, but she's done a pretty good job of that. So she'll have a minimal capital gain. But the thing is, she's got this pot of money now, and she's going to rent a place, and her plan works because we know liquidity in retirement is so important. So actually melting the glacier of the home, not buying another home, but renting and that not even having any expenses like she needs to take care of, just putting in an inflation index for the rent. Plan worked.
Well, I think that's a great idea, right? You extrapolate the
do.
capital you have within the fund or within the home. You now have, and especially if you were still paying a mortgage, right now you may free up several $100,000 that you can utilize. Your rent may be similar once you calculate the mortgage, the insurance, the taxes, the maintenance, all of those things that are so very expensive, and it can work. And I think it's smart in a market where things have been high. And you know what? Maybe someday she goes back and buys something again.
Smaller, but she might do that. Yes, absolutely. But she has freed up cash and liquidity and cash flow in retirement.
Yeah, what a good spot to be in.
When we get back, we're going to talk about how life gets in the way when it comes to planning in retirement. Stay tuned.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
The Real Investment Show YouTube page has all of our videos ready for your easy access. From 3 minutes on markets and money to each day's radio shows like Technically Speaking Tuesday, Financial Fitness Friday, and the latest analysis from Lance Roberts and Michael Leibowitz. Subscribe and bookmark our YouTube channel for The Real Investment Show, or just click on the show links at realinvestmentadvice.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets. And unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA advisors to work for you managing your 401k plan. Get started right now at the website, realinvestmentadvice.com, or simply call our toll-free number, 855-RIA-PLAN, or again, simply online at realinvestmentadvice.com.
Small businesses are discovering that attracting and retaining top talent come down to more than just salary. In today's highly competitive job market, compensation is more than just wages. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Healthcare and retirement plans can make the difference in hiring and retaining the best employees. We can show you how to build an affordable, effective employment package that delivers true value for your workers and your business. Call me toll-free at 855-RIA-PLAN or online at realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Bulls win in bull markets. Bears win in bear markets. Eagles soar above and take advantage of opportunity. Let us help you soar as you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
The Real Investment Show.
I wouldn't know when to talk. So Joey Sox on Joey Sox, hey, what you doing, man? Sounds like one of the mob kids from Brooklyn. I'll meet you at the Spumoni Gardens later. We'll share a slice. Grocery package size won't go back up either. You know, it's funny. Brent will remember this, but when in the late 70s, my grandmother got me a job at the local supermarket in Brooklyn. She had to bribe the dude with a CB radio. She gave him a free CB radio to give me a job. I was like 12 years old. So I'm unpacking boxes. And I liked the job, except I used to look at the guys that were working there as a career. I'm like, oh my God, is this me in the future? No hair, with a terrible mustache, packing out shelves. But the issue I'm trying to get to is, do you remember the size of cereal boxes in the 70s?
Oh, they were ginormous.
And the coffee cans. Yeah. Remember you would get the huge, I mean, we used to have to unpack those things.
Coffee cans were big enough that you could put your life savings in them.
Pretty much. I mean, the ones at the bottom shelf, they were.
Yeah, many people did.
Because I just, when I went to I don't eat a lot of cereal, but when I went to the cereal aisle and I picked up a box, I went, what is this? I have never seen a box so small. And cereal was the stuff you ate when you didn't have any money.
Yeah.
Like cornflakes or whatever, because you got this massive box.
Mm-hmm.
And
now they're like sample size.
Cereal's become like a delicacy. As far as the price of the cereal. It's like $4 a box.
A box a bowl.
That's what it is almost.
Yeah.
Danny, you just wouldn't believe the size. The boxes were massive. I just needed Brent to validate that. But yeah.
And they had stuff on the back that you could spend the entire bowl reading.
Yeah, well, that's what you did.
That is true.
You read the back of the box.
Right.
Or they would have games.
Mm-hmm.
Sometimes they would put records at the back.
All kinds of stuff inside.
And you would have to cut out the box.
Yes.
So I'll never forget, I walked in one day. And I went to my aisle. Everybody had an aisle. It was very important. So I had the cereal aisle. I had the cereal aisle and I had the cat food aisle. Not together, but... And I was like very anal retentive. All the cans had to face out and stuff like that. So I'm looking at the cornflakes or something, or Frosted Flakes. And I'm like, gosh, these boxes look sort of funny, like somebody's gone through them. I turn around and someone cut all the records out of the back and put the boxes back. Yeah, you would play the...
Big money in those records.
Yeah.
Well, they were made of paper, but they worked. So just the thing. I just remember those cereal box, how small it was.
You know, they arrested that guy.
Would they? Oh, God.
He was a serial offender.
He broke the record for it.
He did.
Yeah.
Damn
That's
it.
the end of the show for today. Because Danny is like, I'm done with these two. We're the two guys outside of Cracker Barrel who annoy you in the rocking back and forth, telling dad jokes.
Oh, the ones up in the gallery?
Yeah. No, you know, like out front.
Yeah, no, but
Yeah.
on the Muppets.
Yeah.
The
like
two
those
old
two
guys.
guys.
Yeah.
Yeah. But we're in front of Cracker Barrel playing checkers and making fun of everybody as they walk through. That guy is a half a cereal box missing. So retirement's difficult, especially when cereal is the size of a thumb. You get one cornflake. So we always talk about how pre-retirees, 5 to 10 years from retirement, very little time to recover from financial shocks, right? Danny, right? We always have to make sure that what does an allocation look like? The saddest part about the process of a conservative allocation is it hasn't been so conservative when it comes to volatility, right? Bonds
Yeah,
have
not these
been-
last 2 years.
Bond has a target on his back. James and bonds because of where interest rates have done. So you have a 20-80 allocation, 20% to stocks, 80% to bonds, and that is deemed conservative or principal, safety of principal, and it has been anything but that. And I'm talking whether people own individual bonds or ETFs. If I own an individual bond, I might have bought individual bonds when I was getting 2%. And it looks like I'm hemorrhaging when I go into my account and say, and how many people we know and clients that have bonds that are paying 2.5%, 3.5%, they are not going to mature for the next 2 or 3 years. But it's not worth selling them when you actually do the math and actually buy bonds that are paying more. So if you buy bonds and you're sitting on them, that's what you're supposed to do, but you're not getting the rates that you want. So being a bond buyer now is not a bad deal, right, Danny? I mean,
No.
if I want to buy bonds today, even I might be looking at in 2 to 3 years rates lower. So that's good. So you look at today, pre-retirees or retirees that are going to have more in bonds versus equities, depends on when you bought them.
Well,
And that's the sad part of a conservative allocation. It has not been as conservative as you think when you see what's happened.
Well, and a lot of people have been in funds, so most people will invest in mutual funds or ETFs. I mean, not everybody's in these individual bonds. And, you know, there's different environments where one can be more advantageous than the other. Right now, I would think you'd want to lock in with the individual bonds. If you own them,
Yes.
that price is already baked in as far as like if you wanted to flip it into a new bond right now. That price is baked in because with the appreciation before it matures, it effectively is about the same rate as if you went and bought a same bond for the same
Because
duration.
you have to take into account. So explain that. Because people are looking, they're going, shoot,
Well,
my
let's say you
bond's
have
paying
that-
2.5%, and
Yeah.
I'm down, 10% in my bond. So explain
And
that.
if it's going to mature in the next 2 years, that bond's going to mature at par value at $1,000. And let's say it's worth $950. I mean, we're just throwing numbers out here, but you're going to get that money back. But effectively, the market will price in what you would go and flip that to get. So let's just say that you have a 2.5 and now it's 4, but your bond will mature at that price. It's already baked that price into it. And so I know it's tough to kind of picture, but essentially the bonds will decline and your effective rate of return over the next 2 years, if it's a 2-year bond, is going to be very similar to the same equivalent bond if you went and bought it today. So it doesn't always make sense to go and flip that. Now, if you're in short-term bonds, you say, you know what, I think interest rates are likely to decline in the future. I want to go ahead and lock this in. Well, then you could say, okay, how long does it take me to break even if I sell right now and I'm upside down?
Right.
Versus waiting the 2 years, because you may think that, hey, in 2 years rates are way lower. It doesn't make sense. And if that's the case, then understand it may take you a couple years, but if you buy this and you may say, hey, I'm going to hold this for a long time. I have clients for years who would buy bonds, especially when rates were much higher, like mid 2000s. They'd say, I'm not worried about the price. I'm in it for the income, right? They created that income stream.
Well, and they were getting a reasonable income.
But they would hold them.
Yes, they would hold them.
And now I don't feel as many people hold them.
I think ETFs are in the market.
Yeah.
I think ETFs have created, a trading opportunity for them. And
well, but
it
also
seems like the
think
bond
that-
market has gone crazy, like the stock market. It used to be like the bond buyers were like the smart people in the room. I'm really not so sure now. They seem to be just as crazy as stock investors.
Well, I
So,
think
as far
everybody's
as
frustrated,
emotionally.
right? I mean, like you mentioned earlier, these last 2 years have been more challenging than I think even 2008.
Yes.
I mean,
Well,
everything
at least in
declined.
2000
We knew it. You saw the economic devastation around you.
Right.
But we have had, you see economic devastation in many different ways, but then you see another proposal, another stimulus act, another, something else that they push.
Because you don't fathom the fact that you're spending more money to bail us out. Like, you never fix problems. And since 2008, this whole thing has been broken. Fiscal response, monetary response.
Yeah.
So, like you said, at least you saw the devastation.
And you could rationalize it.
You could rationalize it. There were some assets that did work. I mean,
And-
treasuries
yeah.
were. I mean, there were safe havens, right? I don't even know what a safe haven is today. It should be treasuries, should be sometimes gold.
Well, I think it will be again. I don't think the game has changed that much in that aspect.
Yeah.
I think a lot of people want to think that it has, right? I mean, crypto was the safe haven for what, 6 months?
Do you remember when
6 days?
I don't see any of those crypto people on the
Man,
air anymore,
yeah, it's
like
gotten
with Charles
quiet.
Payne or anything. Like, they're gone. But they would tie themselves into word pretzels, rationalizing how crypto was your harbor in the storm. Okay. We knew that was a little crazy, but yeah, you don't even see those. So I don't hear anybody talking about except for cash. So, there are a lot of advisors coming out and talking about, well, listen, and there are a lot of investors who feel this way. I don't, but you could put all your money in short-term treasuries, CDs and all that and make 5%. No brainer. That's dangerous too. That's dangerous too, unless you believe that these rates where they are permanent. And with the debt we have and with the economic growth the way it is, it's just not, and the demographic situation across the globe, we are not in some new growth paradigm, as much as I hate that word. So you're going to shove all your money into 5%. You'll feel good for about a year. It's like when I eat those 4 candy corn pumpkins. I'm feeling real good.
Feel good, but you're going to pay for it later.
For a few minutes. And then I'm back to, when do I get to eat my next 4 pumpkins? These rates are not going to stay. And we're going to talk about that. We're going to also talk about, again, life gets in the way. More than half of all Americans are open to work after retiring from an employer and would consider working indefinitely. We call it the diet desk retirement plan. Lance, you're on that plan.
Oh,
She didn't.
no doubt.
Yeah. We'll be right back.
The Real Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
Oh, Red, I declare, I plumb missed that candy coffee. Whatever am I gonna do?
Don't you worry, little darling. We'll watch it again on our YouTube channel.
Why, Red, I never.
The Real Investment Show YouTube channel has all of our past presentations, from Candid Coffee and Lunch and Learn to special topic discussions, and all of our live show recordings preserved for you. Subscribe now to the Real Investment Show YouTube channel, or look for the link on our website at realinvestmentadvice.com.
Health and financial security touches everyone within your organization. Offering benefits for all doesn't need to be complicated. Hi, I'm Tom Allen, Senior Benefits Consultant at RIA Advisors. RIA Benefits provides independent expertise to find solutions that speak to the mission of your business, the culture you want to establish, and the budget you are able to work within. Book a free consultation with me at realinvestmentadvice.com/retirement, and we'll find a solution that takes care of your most important asset, your people. realinvestmentadvice.com/retirement. realinvestmentadvice.com.
You're listening to The Real Investment Show.
In 1999, a parafiduciary group of financial advisors were busted by corporate giants for trying to operate in their clients' best interest. These men promptly escaped from a high-cost margin environment to the Houston Energy Corridor. Today, still excoriated by their former employers, they survive as protectors of others' fortunes. If you have a problem about preserving capital, if no one else can help, and you can find them right here, maybe you should hire the RIA team.
Can't catch the whole show now? Listen to our podcast later at realinvestmentadvice.com.
Part of the problem of the average American is that we've just chosen to live well beyond our means.
Basically, you can buy anything you want out there on a payment. You need new underwear? Go get it on a payment plan.
Underwear can be expensive. If you buy some Jimmy John's, they're not cheap.
Jimmy John's.
And
Sandwich
the point
underwear?
is,
What is this?
But Tommy John's, thank you.
The Real Investment Show podcast
That's why I just don't wear underwear. It's too expensive anymore.
at realinvestmentadvice.com.
Going commando is going to become a new thing for the poor people.
It's going to be a...
And now, another page from the Real Investment Advisors Investing Manifesto. Manage risk and volatility rather than trying to manage gains. You don't have to be right all the time. Long-term investing success is a 70% gain. Let us help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
Real Investment Show podcasts are now available from Stitcher Smart Radio at Stitcher.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets. And unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA advisors to work for you managing your 401k plan. It's a quick and easy application. Just simply click Ask a Question at realinvestmentadvice.com or give us a call at 855-RIA-PLAN. That's realinvestmentadvice.com.
The Real Investment Show YouTube channel has all our videos ready for your easy access. Now with the new and improved Before the Bell reports, plus each day's radio shows. Subscribe and bookmark our YouTube channel at realinvestmentadvice.com.
You're listening to The Real Investment Show.
Well, we got a lot of people on the YouTube channel who are very nice, and then we have Lance. Because we told him he's at the diet desk. He's on the dad plan.
Lance, you know you're on the dad plan.
He
I mean,
knows
that's
it.
Look, it's a fact of life. Just embrace it.
Yeah. Don't get your Jimmy Johns in a wad.
He'd be... Lance, you would go absolutely
He would go
nuts.
crazy. He would... If he couldn't put a chart up every day... He'd be charting Mrs. Roberts. Like, what is she doing today? Every day on a Monday.
Oh, she'd force him back to work.
Yeah.
No way. Absolutely not.
So, you know how he would say, you know, honey, you know, you're annoying me. Or something. Say, listen, your moving averages are crossing over. He would say something like that and really tick her off. And
She's like, yeah, I'll show you your moving averages. They're going way down.
yeah, your MACD is about to hit the
dirt.
Uh-huh. There's no way.
It's funny because it's true.
There's no way that dude could stay home. I'm sorry, but it's just not in. He doesn't know it. We know it. We're his advisors. We know it.
Can you imagine this Lance in his own head all day?
No. I mean, barely when we have to be in his head. That's not easy either. It's like, what is it? You ever see Homer Simpson? And they go, Homer, what are you thinking about? And he's got the monkey with the thing, with the chimes. Ding, 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 in his head.
And it's just a monkey looking at charts.
And you
up
only
and down.
have like 30 seconds to get Lance's attention, and then he's done with you. Like, if you don't get everything out in 30 to 45 seconds, he's like...
Got stuff to do.
Yeah, got stuff to do. Okay, what is he going to do at home? If we don't have that 30, 45 second, he's got to... It's just not going to
feed
work.
his alligators till he gets bored.
In the moat.
Yeah, in the moat.
I was watching the new Walking Dead sequel to Daryl Dixon, and he's in France now. Don't ask me why. I don't really like this show very much, but I watch it, and the dude took over a castle. So listen to this funny part about this is how Hollywood thinks about Texans. But the dude in France takes over a castle. And in the moat, right, where there would be a moat in the drawbridge, he's got zombies in there, which I thought was pretty cool. So Lance would definitely do that. But he gets in the castle, Daryl, and guess who's got the castle? And everybody's afraid of this dude. It's a Texan from Giddings. How y'all doing? Don't cross my drawbridge. So, yeah, the moat with zombies is pretty creative. But yeah, Lance would. I mean, we'd be too. So listen, a lot of retirees, more than half of all Americans, that's including 64% of baby boomers and Gen Xers, are open to work after retiring. So this is a new study from Empower. Danny, we've been talking about this at our Right Lane classes in the past. We've talked about this. I wrote an article about this, the great unretirement, right? It's not just for money. Retirees are looking for personal fulfillment, 41%, sense of purpose, 37%, and of course for financial need. And the unease about the U.S. economy, right? So overwhelmingly, retirees concerned about inflation, running out of money, and unexpected expenses. And also found that 56% respondents rely on their 401k accounts as their primary retirement nest egg. So I think workplace benefits, right? So this is some additional insights from the study. Almost 40% believe post-retirement work help maintains a structured daily routine and keeps them, Danny, mentally and physically engaged. How many times we talk about staying social? And some people will go back to work because of that. And men especially, I think it's important. They go out there, they get another job, totally unrelated to what they did in the past. And they enjoy it. I think they're out there and they have because to keep a schedule and a routine is really important.
Yeah, I think that's a great, and it's something that we see happen more and more often, right? You have a skill or something that's a hobby that you enjoy. People go back to work doing that, or it's just something completely different because you're so fed up with the old, you're just tired, right? I think you get some apathy and you just say, you know what, I want to do something different. And I've seen a lot more people go back because they're bored out of their mind, or they've traveled, or you look at saying, hey, they're frustrated too. I mean, this economy's been frustrating. It's not easy to rationalize, I think, with a lot's going on. So you know what? I'll go back to work, wait this out, wait till things kind of
and to be
themselves
out there and know I have a sense of purpose and a place to go.
Yeah, that's a big part of it.
I think is really important. And I even have clients that'll work. I mean, they're working for nonprofits, but they're working. They have a schedule that they follow every day to maintain that purpose. And I think, to me, I can't see it any other way. I cannot see retiring and sitting at home all day and not having a place to go actually do work. And what happens is, even though you may not be doing the same job, there are those skills that you've learned in your old job, in your old profession, that you're absolutely going to apply to whatever job you're going to take on in retirement. And, I just think, and matter of fact, listen, I think older workers are just great. I mean, we have Karen here. People know Karen. She does a lot of work for us. I mean,
everybody loves Karen.
I couldn't get a hold of Karen yesterday because she was teaching her Pilates class. I'm like, what? 70-something years old. She's out there teaching and she's doing her.
And she called me at like 6 p.m.
Yeah,
like, hey, here's what I got going on.
Uh-huh.
I mean, always at it.
Yeah.
I hope I can have her energy at that age.
Me too. I mean,
very young.
But I think part of that energy that a lot of people that were saying they were going to retire is having that sense of purpose and getting up every day and going someplace that they enjoy to work or talking to people. I know Karen loves talking to people, right? She loves having which we can't get anybody to call on the phone. Call people with the emails and pick up the phone. She loves talking to people. And I think that I have one client that went to a job working at a store, small store, and he loves it. Talks to people every day. He runs the register. He doesn't make a lot of money, but he says, I'm not here for the money, because he ran a financial plan and money helps. He was able to cut his withdrawal rate a little bit from his accounts, but He's really doing it because he enjoys it. And I think that's so healthy. I don't know. I can't imagine not. We're just saying this so we make Lance feel better about being at his desk at 80.
Yeah, I'm trying to envision what his next career would be.
Lion tamer?
Oh.
You would be able to hire him to sit on your lawn to say, get off my lawn. He would do that. He'd sit
Lance
there.
will be a gunsmith.
Yeah, he could do that.
He said it takes time to reload those ammo.
Well, yeah. Especially the arsenal he has.
I'm saying.
Yeah, I'm thinking he'd make a better Clint Eastwood.
That would be funny to see Lance in that role of Clint Eastwood role. That would be good. You think so? Yeah. Except all the criminal have to do is, hey, look over there. Look at that. And he will, woo! And they're gone. Because of his attention. But the work is important. So again, we're seeing this in studies. We put it into plans. If you want to work longer, that's not a death sentence. Doesn't mean you have to work the same job. Hey, by the way, speaking of retirement and jobs, did you see the cost of living adjustment for Social Security?
No, I didn't see that yet.
3.4%. Guess what? Guess how much Medicare Part B premiums are going up this year?
Way more than 3.4%. I can guarantee you that.
6%.
Yeah. And that's actually not that bad in comparison to some other years.
It's not as bad, no. In other words, net, you're going to make more in, it's like an extra $6 or so, I think, for Medicare Part B premium. So it's not too bad. So, but you got to expect that kind of inflation for Medicare Part B. We use like 5.5% inflation for our health care. So that's sort of in line with what we expected overall. But it's not the 8% people were getting. Remember those days, Danny? People are like, whoa, look at this Social Security cost of living adjustment. I'm like, don't get used to it.
Not at all.
Don't get used to that.
Well, and the crazy thing is those are the same years that you got this great cost of living adjustment, but then Medicare went up so much, you're still, it's like, wait a second, that's not quite right.
No, that's absolutely true. So there's also in this post-retirement employment, I don't think there are any studies done, but I think if you actually looked at the overall health of retirees who go back to work, I bet it's better. I bet they're more mentally engaged. I think having that social element is so important. I think it just adds to their overall well-being, wouldn't you?
No, I agree. I think that, studies show that if you take Social Security early and retire early, that you actually, your longevity declines. And a lot of that is that social aspect. I think women are much better than men at this. I mean, studies also show this. But yeah, having that sense of purpose, I think, is huge. And we see people that have been so successful in their careers and in life, and whether it be, and sometimes it's maybe not going back to work, but it's volunteer work. It's having things to remain engaged in, hobbies, being a part of social clubs or clubs that maybe you enjoy, going back to school. I mean, so many different ways you can do this.
Going back to school, I think, is big.
Yeah.
You've got to be a lifelong learner. Hey, when we get back, we're going to talk about the 2023 Life and Retirement Report published by Transamerica about life and retirees. What are they thinking? We're back.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
In 1999, a parafiduciary group of financial advisors were busted by corporate giants for trying to operate in their clients' best interest. These men promptly escaped from a high-cost margin environment to the Houston Energy Corridor. Today, still excoriated by their former employers, they survive
as protectors of others' fortunes. If you have a problem about preserving capital, if no one else can help, and you can find them right here, maybe you should hire the RIA team.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets, and unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA advisors to work for you managing your 401k plan. Get started right now at the website, realinvestmentadvice.com, or simply call our toll-free number, 855-RIA-PLAN at realinvestmentadvice.com.
Small businesses are now being challenged by the lack of employees and how to attract and recruit the best employees. To get the better employee, you'll have to offer a better package. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Don't assume a 401k plan is too costly or complicated for your small business to offer. Let us show you how to make the most of an affordable and effective plan that will deliver true value for your business and your employees. Call me toll-free at 855-RIA-PLAN or online at realinvestmentadvice.com. That's realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. A passive investment portfolio requires active risk management. It's not a choice, it's necessity. Diversification doesn't protect against risk of loss. Let us actively help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
The Real Investment Show.
So we're working on an event for November. We'll keep you posted. It'll be a canned coffee. We're just rifling through which topic we want to talk about. So we love doing our canned coffees. And next year we'll have a new slate of really cool topics and events for you to stay abreast of things. Oof. But man, this year,
It's been fun.
life in unretirement's been interesting. That's for sure. So, Transamerica does this study, and it looks at where today's retirees, how they're saving. Obviously, we're dealing with more of a model of we have gone from an employer-funded model more to individuals carrying the responsibility for providing for themselves. So financial to the emotional, we talk about, it runs the gamut for retirees. And they found in the study that not all these revelations about retirement are negative. And many older Americans report being pleasantly surprised by their life after work. But they also are surprised by tax burdens to emotional challenges associated with legacy planning. We talk a lot about tax burdens in retirement, even though you don't think you're going to have them, and the challenges of legacy planning. And we've just done a really good canned coffee about that. I think that canned coffee about progression planning, end-of-life planning, legacy planning, that was possibly one of the more popular ones we've had. I was surprised, Danny.
Yeah, well,
I know it's just that's not a topic that a lot of people like to talk about. I think we approached it we flanked it a little bit.
A little different way.
Perspective, yeah.
Yeah, and look, nobody wants to talk about death, planning for it. I mean, we talk about people in life insurance and, no, I don't need that. Or the will, the estate plan. And all these things tie in together. And, I think it's always interesting to me that people work so hard to accumulate wealth, to make smart decisions, but yet so many of these smart people will forego the end of their life planning. And sometimes it's because of the cost of it. Sometimes it's just because they don't want to address it, or your family doesn't want to address it. And that is really problematic. And so the problem with it is that you will end up, your estate will spend way more. Your thoughts, wishes won't be met because nobody may know, or they weren't executed properly. And so spending the money up front is typically a way better investment than not doing anything at all, and then letting somebody else control where and how the assets go to somebody. And
I think the cost, depending on what you're doing, is not that prohibitive.
I feel like people think it is.
Well, because I think in the past it has been, and things like you have to do all this elaborate stuff where it may not be so elaborate for you to do. But the emotional hurdle, I think, is really the greater one.
Yeah, no,
because,
I agree.
you can find the money to do anything if you think it's important enough. It's that I got to deal with this, So we'll do that one again. I think it'll be worth doing that one again next year. But freedom is a word. They was looking at word associations, Trans-American Retirement, what people were thinking. And freedom is the most common word association, according to the survey, with retirees being more likely to cite it than older workers, 66% versus 59%. Retirees are also more likely than older workers to cite enjoyment and stress-free with their understanding of retirement, because, frankly, there are a lot of people that are going to continue to work because they have to. They just don't have a choice. They're going to have to work as long as possible. Health decline, this is an interesting one. Health decline is retirement's most common negative word association among retirees, but mostly cited among older workers. That probably is having to do with the stress of having to work a job maybe they don't want to work. I mean, we know you just being younger and not in retirement, that if you got to go to a place you don't like to be or work, that's one of the worst, in my opinion anyway. For me it was.
No, for me as well.
One of the worst feelings ever. Loving what you do, but hating where you do it is really...
It's conflicting.
It's terrible.
Stressful.
It's very stressful.
I'll never do it again, I'll tell you that.
I would never do it again. I would never work for another large financial firm again. I will work at the 7-Eleven, Valero. I would clean poopy at the monkey cage.
Just stop.
Okay.
Your financial plan doesn't work either, okay? You're not going anywhere.
I'm not going anywhere, but that's my point. But I mean, if I had to, there's no way I would go for a big firm.
See, that's the good thing about being the young guy here is that I can tell you guys, like, you think you're leaving, but at some point, you think I'm your exit strategy, but I'm not, because you're not going anywhere.
I've got the acceptance built in, baby.
I know.
I'm not going anywhere.
I'm just reminding
Brent's
you.
not going anywhere either.
It's the way it goes.
Matter of fact, we might use a taxidermist to keep Brent right here at this station, all propped up.
Just bring me candy corn and I'll be stuffed.
Brent's going to have to get a lot better with the mute button the older these two get,
Yeah, you're going to have to.
Oh, wait.
Yeah.
Oh, nope, they're on a tangent.
There's always...
Unlike the tangents they go on now, it'll be,
Well, there's always the digital delay.
Did you ever see the clip of Grandpa Simpson? And he's got a newspaper clip, and it says, "Man yells at cloud." He's Grandpa's looking at the sky going, "Ah, damn cloud." So, yeah, that's going to happen. Some fears about retirement subside once the choice is made. And that's true. I think once you get over the hurdle that you can do it, and I think you need to run a financial plan and get the thumbs up. That's another thing. There's no greater feeling for me being able to tell somebody, you're good to go. Now it's your choice. You want to work another year? Fine. Right? Because of inflation, you feel uncertain about the economy. Some people will decide that, you know what, I'm glad my plan works. Yeah. And they go into work with lighter step. Why? Because they know it's in their control now. If there's something they don't like, they can go. I think that's the beauty of doing the financial plan, Danny, and being able to tell somebody, you've done all the right things.
It should ideally provide peace of mind.
It should, and empowerment.
Correct.
To say, hey, I can go. But I'm going to stick around a little bit longer. Hey, well, that's great. That's just gravy. That's going to make your plan work more. Maybe we can increase the guardrails of how much you can spend. Whatever it is. Working another 2 years, it helps your plan exponentially. You wouldn't think it does based on how quick time goes. But right, when you run a plan and you put in, okay, work another 2 years. I did this with someone the other day. wanted to retire at 65. He collects Social Security at 67. I notched him out a couple of years, and the plan worked. It wasn't working at 65. It was working at 67. And he was okay with working another couple of years.
Well, I had a client who actually retired. Husband was still working, decided that she was going to go back to work. Both of them, I mean, great story. They were well enough off that they could retire. But they enjoy working, and I think they bring a lot and add a lot of value. But we were going through the plan just recently, said, okay, we're about ready to hang it up. And they're still relatively young for most retirees. And their plan, they're like, wow, I remember when we did the plan last year and did this update, it was only at like 90%. Now it's like 97, or maybe a little bit higher. But, there's a big difference.
Probability of success. Yeah.
Probability of success is much greater.
Yeah.
And then the assets they have want to leave to heirs and beneficiaries is much greater. And this is not the situation you had, Rich, where somebody maybe couldn't retire or shouldn't, but, without big lifestyle changes. Mm-hmm. But this is just one where you see those numbers go up and you feel good about it. And I think that's important.
I think so too. And again, I have one client that said, well, I don't have to work the same job. I said, no, if you want to make the same money, you want to switch companies. And he did. And he's happier. And he said, I might work 3 more years because I like working here so much. I was like, okay, well, your plan's going to work after 2, but you want to work 3. That's fine. And this goes along with this study because today's workers are expecting to work longer and retire older. So older workers expect to retire at age 67 at the median. 66% of workers expect to retire after age 65. And let's see, do not plan to retire. This is Lance's number, 19%. Not retiring. Sometimes people don't have a choice about their retirement. They have a health issue that's forced upon them. We're finding caregiving is becoming an issue. So more and more families are sandwiched, right? Baby boomers thinking that, and Gen X is thinking, well, now what? I got kids moving back. I have kids who are moving back home, and I'm taking care of my parents. So you're seeing a lot of that now. So caregiving is becoming a big responsibility where one party is deciding maybe to retire just to be a caregiver. That is going to be more common.
Very common. I don't disagree. A lot to think about, a lot of things to do, but why would you want to retire if you don't have that plan, you don't have that sense of security, and then you're stressed because you're worried about it the whole time.
Yep.
So make sure you do a plan, have a good understanding on that. You have questions, go to realinvestmentadvice.com.
Lots of great articles.
We're always happy to answer questions.
Yeah, go to our YouTube channel, too. Lots of great stuff. We'll have our Medicare up soon as Brent's able to get it out there. Get with it, Brent. That's all we got.
Candy corn.
Candy corn. We need it for
Bribe me with candy corn.
Now that I know he likes it, I'm going to get him some. You have a great weekend, everyone. Lance back on Monday. Take care.